Hi YouTube. Today we're basically gonna go over how I bottom tick the market today using top-down analysis and fractal entries. These are my time frame pairs that I use. I use the weekly, go down to the 4 hour. I use the daily, go down to the hour. If I'm gonna start at the 4 hour, I go down to the 15. If I go down to the 1 hour, I'm gonna go down to the 5. If I start at the 30, I'm gonna go down to the 3 minute. If I go, I mean, yeah, 3 minute. If I start off the 15 minute, I'm gonna go to the 1 minute. And that whole idea and concept comes from T trades. So let's go ahead and get straight into it. All right, so looking at the daily, you could tell that we didn't really have much to read on the daily chart, except we were expanding higher to all-time highs. So I'm going to go ahead and zoom into the 4 hour. Doesn't really give much either. This is probably where price was at the open, around these 2 points. Now I really like the 15 minute because the 15 minute is the best intraday setups, best intraday time frame. So I really like the 15 minute. Let's look at the 15 minute and dissect it and then see how I got my entry and see where I got my trade. So starting off with the 15 minute. So coming into the open, which is around these two candles here, something I noticed was we traded into this 15-minute fair value gap, left this down series of candles here. This here is my CISD because this is the manipulation leg trading down into this 15-minute gap, which is where we end up trading higher and then getting this big displacement at the open. So I can pretty much anticipate this being the low of the day, especially with this big behind expansion coming into the open. So I basically was on my hands, 9:30, whatever. This opens up, trade higher. Then we get at 9:45, this candle opens. I'm still on my hands. There's nothing I could take in between these two candles. Price is just expanding, and this is where price starts slowing down. So what I noticed, this candle takes out the previous candle high, trades back inside this range. What do we leave here? I'm gonna go ahead and replay real quick. What do we leave here? Right. What do we leave right there? We end up leaving this fair value gap right here. Ignore that yellow box that's just floating in the air right now. We leave this fair value gap right here. What is the most relevant thing I could pull out here inside this gap? Well, preferably I want to see this upper portion stay open and we could leave that 50% open. But depending on structure on the 1 minute, because the 1 minute and the 15 minute are tied, then I'll see what I do for an entry. So I'm going to go ahead and zoom into the 1 minute and see what the structure looks like. Okay. So now in the 1 minute, I can see we're taking out short-term highs, respecting the order block, respect the order block. So now we put in another order block. So again, we take out a high here, put in an order block, down close candle, up close candles, order block. My mindset was, all right, I want to see at least mean threshold stay above and get traded above. Or if we get a close below that, this will become an order block and then we'll start to get some bearish structure. So that's something I'm starting to pay attention to, and I want to see how price reacts and holds that. So price is playing around. We'll go ahead and go through. Playing around, consolidating. Boom. So now we get a close below that here. So now this, I'm not really going to use that so much. I didn't really use that anymore at that point. But I did notice that price got really strong closure below these lows here with that candle there. We were super close to that consequent encroachment of that 15-minute gap. So I'm only looking to take a trade off the 15-minute gap having some sort of structure, and the 1 minute will be my entry, not the 1 minute having a structure and that's my entry. No, I want to use the 15 minute. So I'm sitting here patiently waiting for that 50% level to get hit. Trading. We leave this gap here, which is also my CISD, my change in the state. Boom, bearish gap. I'm gonna make it blue, get inversed. Almost, we put in an SMT right here. SMT is going to go right here. SMT gets put in again. Expansion through the high here. And then what do we get? An inversion. Put a nice little order block in there. Just very strong. Low, high. Almost, we had a breaker on ES. So low, high, lower low on ES and a higher high. So I like that structure on ES as well. I took my entry. Now this is where I could see people get confused. Also, my risk is below that candle there. This is where I can see people getting confused because it's like, well, the target is right here. What I did was I'm bullish on the higher time frame just because of the structure we have right now. So I don't think price is going to stop at this high and just get a dead reversal, especially as bullish as we've been pretty much good 3 weeks now. So I ended up grabbing standard deviation, marking it out, and then I was just targeting 202 there. Price goes up. Just watch it play through. We have AMD, trade lower. I mean, AMD, accumulation, manipulation. Now we start to distribute lower. Now, this doesn't change anything for me just because this price action is looking a little bit more bearish. What are we doing on the 15-minute time frame? So as price is doing all that, what are we doing here on this time frame? We're just holding this order block. So all this hesitation in price and selling off, I'm not worried at all. As long as the 15-minute, when I'm thinking in my head, as long as the 15-minute doesn't get a close below this candle here, if we don't get a close below this order block and we stay in this mean threshold portion, so the 50% level, this is where it gets dangerous. If we get a close below here, this red line, and start displacing here, then my stop loss is a problem. But until then, this trade has no issues. What happens? We dip a little bit lower. We get this inversion gap here. I like it because it was used as a resistance level, extended out. Now it should be used as support if we're on the right side. Trade a little deeper, take out this low, low, low taken out. Nice V-shaped reaction you're about to see. There it is. Could have been better, but there it is. Continue on. Now I got partials at the short-term high. Short-term high, boom, 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 boom. Actually, let me show you my executions. Let's go ahead and show you my executions. Oh, I can't because it's a replay trade. So now short-term high, I got TP levels there. So I took out a little bit of my position there. And then one more high here. Send it out through time. And then I was fully out of my position there. So ended up closing the full trade there, which is fine. I don't mind that. I got my money's worth for an ugly, sloppy day. So let's go ahead and show you guys the results of that trade. So there's the execution. So again, just to break it down, 15-minute is holding what? That 50% level of the gap. Displacement through bearish structure. Entry, CISD. Continue higher. Boom, leave a short-term high right there. I like it. Trade back down. What's happening down here? We're respecting that 15-minute order block. Displacement, boom. Especially around the macro, which is what I really like. 1053, 1054. And we continue going higher. Honestly, I actually remembered I took a partial here at this short-term swing. Consolidation. Come back down. Respect this gap again. Come up. Took a partial here. Took a partial here. And then I took my last one here. You can see price never went. Whoa. It did go back to my break-even point. It went back to my break-even point one more time. I was break-even after being here. And then it came boom, 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 and just went higher. So good trade. It went to my level, into my standard deviation. So I'm going to go ahead and show you guys another example. All right. So here's another example of time frame alignment that I noticed earlier. So I looked back as the day was going on, and what I noticed, well, price started trading a little bit lower. I haven't really lost my bias. We haven't really done anything bearish here. We haven't done anything bearish. I do, if you want shorts, I guess it's decent that we close below this low here. But what I would want to see preferably, this gap. If I'm going to take any shorts back to this low, I'd want to see this gap this order block get traded below. This order block gets traded below, then I can look for lower prices. So if we get a nice displacement close through here, then I can start to look probably to come fill up this gap. That's the most likely thing to happen, right? So as long as price isn't doing that, I can continue looking for longs. So I'm going to go ahead and mark out this order block here. Again, we're on the 15-minute. We're navigating the 15-minute all day because there's nothing else to look at. The bodies are respecting what? Mean threshold very nicely. So now I'm going to zoom in, look at the structure. Okay, so what do I notice? Okay, boom, this is where we rebalance back into the mean threshold point. Let's actually change that to red. I'm going to change this to 50% quad level. Okay, mean threshold gets respected. What do I notice? We have a low, a high, a low, a high, lower low. You could wait for a breaker entry here. See, do we get through these series of gaps? We get to these series of gaps. We inverse this gap here. You could take a potential entry in here as we go through this gap. We also respect this order block. So series of candles, price opens, trades lower. That's an entry there. Trades higher. This is a little bit more of a riskier entry. You got to believe in the trade, but there's an entry there. I'm going to go ahead and mark out this breaker block here. So there's the high of the breaker block. So I want to see preferably a unicorn entry, which would give me this reclaim bullish fair value gap. I want to see that go back to being a bullish gap. So, all right, so let's actually take an entry here. And what I'm going to do here is I'm going to go buy 7. I'm going to risk below this order block. I like this order block. It's also below this inversion fair value gap in case price does want to test back inside of that. This is like the lowest I would want to see price go. And then what can we do here? Because we still have all this bullish structure on the higher time frame, I can throw another. I just noticed that I measured the standard deviation wrong. It should be at the top of that down close candle. So my standard deviation target should be a little bit lower. But with that being said, the logic is still in mind. You could have just waited for the inversion, but continue enjoying the video. So that's why I'm using that. So then let's see how this plays out. And I'm going to take off a good portion of my position here. This high is the low hanging fruit. There goes price. Accumulating, here we go. So we trade lower, we trade into this inversion gap here. So this gap, which what I want to see is it changes character. And then I would want to see us trade higher. Boom, trade higher. You're starting to displace away. Boom, high gets taken. Now I'm break even. Most likely gonna get stopped out in profit. This is another example, again, just going over it. Mean threshold holds, price trades down. We zoom in off of the mean threshold. Want to see how price reacts. How is price reacting? How's the internal structure? Come in, put this breaker, get this entry. Boom, there. Keep our stop below that breaker, which is also right below this inversion gap. Price trades on into that inversion gap. Most of our position out here. Price goes a little higher, and then we could be taking out partials there. And then we come down, and then eventually you see later that we do go higher. So that's pretty much it for today. I hope it was simple and easy. I'll see you guys in the next one.